Ooh, what's going on, my fellow trader and investor homies? It's your boy Kevin. Welcome back to the channel. Welcome back to Touchdown Trades. The crypto market is dead forever. We are seeing the entire crypto market crash. It is crumbling. It's on its knees begging for forgiveness, but there's no forgiveness in the financial markets. In today's video, we're going to be breaking down this epic, momentous crash that we are currently seeing in the cryptocurrency markets. And we're going to be talking about what caused it. Can it recover? Will even Bitcoin and Ethereum recover? And we're also going to be talking about the UST LUNA collapse. This is a 2008-2009 Lehman Brothers style financial market collapse event that we are witnessing firsthand today. There was speculation that this would happen to these stable coins, offering outrageous interest rates. Now, 7-8%, that's doable, right? We see it in the stock market all the time. You can expect to get a 7% return annually, year over year, and it's not scammy. But when you start offering 20% returns, that is outrageous, and it is eventually going to come crumbling down. We have seen people call it out, but it was just written off as FUD.
Oh, it's just FUD, bruh. FUD, bruh. He's just talking FUD, bruh. Don't listen to him.
Invest your money in these stable coins offering 20%. We have even seen some offering over 1,000% annual return. So now the fruits are coming to bear. It is game over for these stable coins. It is all coming to an end. You're going to want to stay tuned for this one. There's a lot of dirt that we're going to be uncovering in this video. Now, Bailey's got to get out of here. Let's break it down. Let's get it. All right, so I got the Luna chart put up on the screen, and look at this disaster. Look at this disaster. It is going to zero, folks. There is no doubt about it. Luna is going to zero. What is Luna? And why does this matter? All right, so Luna is a pair with UST. UST is a stable coin that was pegged to the US dollar. So you would buy or invest into one UST token, and you would get back, or you would spend $1 and you would get one UST token. They were pegged. It never moved. It was supposed to stay at $1 US. Why is this a problem? Well, they were offering a freaking 20% return on your money. So you put $1 US into UST, and you would get back at the end of the year, you would have $1.20. And this is outrageous because they weren't really doing anything. When you get money, put money into a savings account at the bank, you're going to get a really small interest rate, like 1/3 of 1%. Something along those lines. But that bank, in order to give you that 1/3 of 1%, is investing your money. They're lending your money out at an interest rate in order to provide your interest rate back to you. The problem with these stable coins is they're not really doing anything to give you that 20%. It's a Ponzi scheme. In order to give you that 20% where you invested $1 US into one UST, they need another person to come in and invest another US dollar to give you your 20 cents on the dollar. And eventually, we all know that Ponzi schemes come crumbling down, and that's where this comes into play. That was UST. So what Luna is supposedly, if UST ever depegged, meaning the price went under $1, which would be a problem because it's supposed to peg to the US dollar, you would be incentivized to burn your UST. So you own UST, it depegs from the US dollar, let's say it goes to 90 cents. You burn a few of your UST, in return, you're given Luna tokens that you can then sell or exchange for Ethereum or Bitcoin, or sell it and just get US dollars back. So everything was supposed to work because of this algorithm pairing UST and Luna. However, look at Luna now. When the shit hits the fan, Luna is currently trading at 1 penny. It's at a penny, less than a penny. It's fluctuating between a penny and like 3 cents. It was trading at $119 just a couple of weeks ago. This is a disaster among epic proportions. It blows the entire idea of these algorithmic stablecoins out the window. It's game over for these algorithmic stablecoins. Now, the next question is what happens to USDT? This is a multi-billion, maybe even trillion-dollar stablecoin, the biggest stablecoin there is. It's currently fluctuating from being pegged at $1 and not being pegged. Theoretically, there is supposedly actual US money or actual intrinsic value behind this. For every $1 in USDT, there's supposedly a real US dollar out there backing it. But we have already seen speculation that this may not be true. And if USDT fails, it is game over for the crypto market. Bitcoin, Ethereum, they're all crashing. Now, Bitcoin and Ethereum, I don't think they're going to zero. They're not going to zero. They actually have some application. They're not going to zero. I do think there's going to be a several month correction or crash, whatever you want to call it, in the entire crypto market. Luna's done. UST is done. It's game over for those two. And this just shows us that crypto has a long way to go. And I've said this in videos before, and I've been critiqued for saying this exact thing. This is the beginning of crypto. Remember what happened in the beginning of the dot-com bubble. Everybody just wanted to buy any website related stock and company. And it wasn't the real companies that were going to survive that people were investing in. They were investing in scams and frauds. And that's exactly what has happened here in the crypto market. And that's why I haven't been talking about a lot of cryptocurrencies on the channel, because these cryptos today are not the cryptos that are going to be in real world application a decade from now. I'm not saying that crypto is not a real thing that is going to destroy the current financial ecosystem, because I think it will. I think cryptocurrency is the future, but not the cryptocurrencies that we're looking at today. It's going to be some random cryptocurrency that comes up 3-4 years from now that has crazy utility and crazy application. The cryptocurrencies of today, most of them don't have any real world utility or application, and that's a problem, because at the end of the day, if these cryptocurrencies aren't solving a problem, if there's no real world utility or application, they will die. And look at UST. The algorithm was all BS. Luna is dead. It's game over for UST and Luna. And Bitcoin, let's take a look at the Bitcoin chart. It's not been pretty for Bitcoin. If we look at the weekly chart, it's broken this very significant area of support. And I do think we approach $18,000, maybe even $15,000 over the next couple of weeks. Now, this could be a buying opportunity for Bitcoin. I'm going to hold off and see how this plays out, but I would not be surprised at all if we came down and tested this level way down here in the $17,000 to $18,000 area. This is a problem, and it has been transpiring. It's been building up to this, and now we are witnessing it firsthand. So what am I doing with my cryptocurrency portfolio? Well, to be honest, I don't have one. I sold out a while ago. I sold out of Bitcoin, Ethereum. I had some Cardano. I had some Solana, and I sold it all. I just was expecting this correction. You know, we were building up. We were bull flagging on the Bitcoin chart, the weekly chart. If we look at the weekly chart, we had this flag kind of forming this uptrend, and there was no momentum. The volume was drying up, and it was looking like this should be the perfect time for Bitcoin and cryptocurrency to thrive. We have inflation out the ass. This is what crypto heads were saying was going to happen, and that cryptocurrency would take over because of the inflationary aspect of the US dollar. Well, why was Bitcoin just chopping around? Why was crypto not strong during this time of crazy inflation? We should have seen the crypto markets taking off during this time of crazy inflation. Instead, all we saw was chopping around, move up, then the next day you're down big, up big, down big, and that told me that there was a problem. problem. So I exited my positions, and thank God I did that, because look where we are now. Now, will I be buying Bitcoin back? Will I be buying Ethereum back? Sure I will. Sure I will. I'm still a crypto believer. I still think there is upside in the crypto markets, and I know a decade from now we will be looking back, and this will be like the 2000 or the dot-com, early 2000 dot-com bubble. It gets rid of all the frauds. It gets rid of all the phonies, and only the real projects will be left standing. So what I'm looking for is this support area here. I want to buy in this $17,000 area, this $18,000 to $17,000 area in Bitcoin. If we look at Ethereum, same thing goes with Ethereum. If we zoom in a little bit, I'm looking to enter Ethereum right here at the 1410 area. Now, that's a long way to go. We may not get down there, but I'm going to be holding off. I'm going to be keeping my powder dry until we hit these two areas in Bitcoin and Ethereum. I just want to talk to you guys about these Ponzi scheme, stake your tokens, or these stablecoin projects. They're all BS. If they're offering more than an 8 or 9% interest rate, even USDT, be cautious of that. If it's offering more than 7 to 10% of an interest rate, it's 99% likelihood that it's a scam. We have seen some outrageous promises. How are people believing that you're going to get 1,000% APY on your crypto staking or your stablecoin? That is just pure stupidity. And I don't want to say people deserve it, because nobody deserves to get scammed or ripped off of their hard-earned money, but you have to use common sense and logic. Unless you're doing a lot of crazy research and trading yourself, you're never going to see that type of return from just buying something and leaving your money in it. You're not going to see 1,000% APY from doing that. So if you see these projects, these stable coins, or these projects wanting you to stake your coins, just be very, very cautious. Look at the APY, 7%, maybe it's legit. 25, 30, even 15%, probably a Ponzi scheme. Be careful. The touchdown trades community, we're smart. We're going to stay away from those scams. But remember, folks, I'm way too stupid to be a financial advisor. So do your own research. Do your own due diligence. I love you guys, and I'll catch you in the next video. Until next time, deuces.